Hello traders, welcome back to my channel where we simplify forex trading concepts to help you become a better trader. If you are new here, make sure to hit that subscribe button and turn on the notification bell so you never miss out on any of our valuable content. Today we are going to explore three key concepts in forex trading, which are leverage, margin, and equity. Understanding this is crucial for managing risk and maximizing your profits. Now let's dive in. Let's start with leverage. What is leverage? Leverage is a powerful tool in forex trading that allows you to control a large position in the market with a relatively small amount of your own capital. It is essentially borrowed capital from your broker that you can use to increase your potential return on investment. For example, if you have a leverage ratio of 1:100, this means that for every $1 of your own money, you can control $100 in the market. So with just $100 of your own capital, you could trade 10,000 worth of currency. Have you seen the power of leverage? Leverage is just the money you borrowed from your broker to increase your buying capacity in the financial market. Now, let me take our normal physical market to explain the concept of this leverage. Let's take for instance that you went to the market to buy some stuff and there is an organization in the market that gives you a leverage of, let's take 1:100 as an example. They gave you a ratio of 1:100 and you went to the market with just $1. So with that leverage they gave you 1:100, it means that with that your $1, you can buy goods worth of $100 because of the leverage you are giving. If you are giving a leverage of 1:500, that means you can buy goods worth of $500 with that your $1. That's simply the power of leverage. Many brokers offers different leverage options starting from 1:20, 1:50, 1:100, 1:200, 1:500, 1:1000, 1:2000. Some even offers unlimited. So it's left for you to choose the one you want based on your risk tolerance. And mind you that leverage can magnify your profit. That is, it can make your profit bigger. It's also important to remember that it can also magnify your losses. That's why it's crucial to use leverage wisely and never over leverage your account. Now let's talk about margin. What is margin? Margin is the amount of money that you need to deposit with your broker to open a leveraged position. With that example I gave above, that $1 that you went to the market with, that is the margin. That is the money you put so that you can use the leverage. Think of it as a security deposit or collateral for the leverage you are using. For instance, if you are using 1:100 leverage and you want to open a $100 position, you will need to put down 1% of that position as margin, which will be $1. So that's margin, like I explained before. So now we have two types of margin, which are initial margin and maintenance margin. What is the initial margin? The initial margin is the margin required to open a new trade. It is calculated based on the size of your position and the leverage you are using. Now the second one, which is a maintenance margin, is the minimum amount of equity that you must maintain in your account to keep your position open. That is, you must have an outstanding money in your account after you have given the initial amount to open a leverage position. There is certain amount you must have in your account so that will back you up. So that's what we call maintenance margin. So this maintenance margin is what is keeping your account running. Let's say if your equity falls below this level, that is when you are losing a particular trade and your equity is going down. You might receive a margin call from your broker asking you to deposit more funds or close some position. Now let's move over to MT5. Let me place trade with a demo account and show you how the margin works. So let me open my MT5 app. Then this is the layout of the app. Let me use a demo account to demonstrate to show you what the margin means. So this is a demo account. Now I come over, see the account balance of the demo account. Then we have the equity, then we have the free margin. So let's go over to chart now. I choose on the chart. Then let me see after my analysis, and based on my analysis that GBP USD will sell. That is, will sell. Then I'll click on sell. I'll increase my lot size. Let me see. Let me use one standard lot. Let me use one standard lot. So now, then I press on sell, setting my stop loss here, then my TP here. So now, look at the position here. Have you seen it now? So, have you seen the margin I've used? See the 1% I'm talking about, the initial margin. That is $133.14. That's the 1% I dropped to open this trade. Do you understand? So now, see the margin. That's the initial margin. This place they wrote margin. Then this place they wrote free margin is the one that is maintenance margin. So if this one goes below the initial amount that was scheduled for it, you will receive a margin call. So this one here is the initial margin. Have you seen it? Why this one here, this one free margin, is the maintenance margin. So that's it. So the next thing we are going to talk about is equity. What is equity? Equity in Forex trading is the total value of your trading account, including both your initial deposit and any unrealized profit or losses from open position. It is calculated as equity is equal to account balance plus your unrealized profit or loss. So that's what is equity simply means. There's no much explanation on that. For example, if you have $1,000 in your account and you have an open trade with an unrealized profit of $200, your equity will be 1,200. That your initial 1,000 you deposited plus the profit you made, which is $200. That is equity. Then on the flip side, if you have an unrealized loss of $200, your equity will be 800 because you are losing 200. Then if you minus 200 from that your 1000, that should be 800. So that is equity. Your equity changes in real time as the market moves and as the value of your open trade fluctuates. Now that's wrap up for today's video. Leverage, margin, and equity are three of the most important concepts in forex trading, and understanding how they interact is the key to managing risk and maximizing your profit. If you find this video helpful, make sure to give it a thumbs up, share it with your fellow traders, and subscribe to my channel for more in-depth forex tutorials. If you have any question or topics you would like me to cover in future videos, drop them in the comment below. Thanks for watching.